Welcome back to State of the Nation. The CBN Director of Corporate Communications, Mr. Isaac Okorafor, has said that the recovery of 60 billion naira excess bank charges was made possible through the bank's Consumer Protection Department. According to him, the amount was recovered following complaints by 13,000 customers over excess and illegal charges on their accounts by the banks. Mr. Okorafor also disclosed that the erring banks were meted with various penalties by the CBN. He has also stated that the Apex Bank is determined to ensure that no bank customer was cheated with excessive charges from their banks. Johnson Chukwu is a financial expert. He joins me via Skype to analyze this. Many thanks indeed for joining us on State of the Nation. Were you surprised, though, by this staggering amount? Because this must have been going on for such a long time.
Thank you, Gilbert, for having me. Honestly speaking, the amount involved of 60 billion was actually a surprising figure to me. I could have imagined that the level of abuse of customer rights by the financial institutions could amount to that amount or that volume of money. 60 billion is a lot of money. And when the central bank said about 13,000 customers complained, and it's based on the complaint about 13,000 customers that 60 billion was returned, you can imagine the number of customers that may also have had their resources or financial resources wrongly appropriated by the banks that have not complained. So I was actually alarmed at the figure because 60 billion by any standard is a large amount of money in this country.
Now, I know that a lot of people are watching and they're saying that I must be part of that 60 billion because it's such a huge amount. But which of the categories would you say the excesses were discovered? Was it through the ATM machines? Do we get to have refunds, especially for people who use ATMs? That figure, 60 billion, very huge.
I think anything I say as it relates to the sections of the banking charges that these charges may have come from may be speculative. But if we have to look at the high value transactions, they most likely will come from loans because the loans are where you have the high value transactions. Basically, what could have happened was if a bank, instead of charging a customer, for instance, if the terms of the loan specifies the 25% interest rate, and the bank maintain in their system a 25.5% interest rate, the amount that the bank would deduct as interest charge from that customer, if the value of the loan is huge, will be very material. And I know in a lot of instances where customers have gone to the bank and the customers are called in a forensic auditor to go through their charges. In most instances, they are related to bank loans, where the customers felt that they have been overcharged in terms of interest costs. I think loans will account for the larger portion of whatever those charges are coming. And then you have to look at account maintenance fee. The banks are entitled to a maximum of 1% of the value of the transaction as account maintenance fee from the customers. And in some instances, the big customers negotiate this account maintenance fee below the 1%. So if the bank maintains a higher rate, in some instances, the customers are not thorough or detailed enough to go and vouch the amount that's charged on the account. This also could be another area where the bank makes a customer wrongly. So you mentioned the issue of ATM charges. The ATM charges, as you know, have actually been drastically reduced by the central bank. Maybe the charges may be related to previous charges when the amount that the banks were supposed to charge, particularly on other banks' ATM, was much higher. But there are several charges that banks impose on customers or extract from customers. Any of these charges could have been abused if the bank decides to maintain their system at higher rate, believing that the customers are not detailed enough or may not even have the technical capability to vouch the amount that they are debited to the account.
When Mr. Isaac Okorafor spoke in Imo State, he said that the bank will be adopting intermediation strategies to monitor the banks. Now the question is, what guarantee is there that the culprits in this instance will not cover their tracks, just so that we don't go back again to have another 60 billion naira that is mopped up to be paid back to customers?
Well, the greatest deterrent to criminal activities or illegal or unethical behavior is sanctions. Isaac Okorafor did say that they have imposed penalties on those banks that overcharge their customers. I believe the 60 billion may also include some penalties. But beyond that, if the central bank can extend the punishment to the point where it becomes individualized, so that the officers in charge or authorized excess charge could be singled out and punished. I know in the banking system, if you are involved in committing fraud, we are barred from being employed by any other bank within the Nigerian banking system. So if such punitive measures could actually be instituted against those who abuse customer rights, that will further act as deterrent to the bank to go back and continue to exploit the customers. But I think the level of sanctions and the ability of the central bank to continuously enforce such sanctions will determine whether the banks will desist from such illegal charges or not.
Now, let's go beyond this one and see if we can broaden this discussion. How would you assess the CBN's monetary policies in the past 1 year? Has it worked in the favor of the people of this country?
Well, it's a difficult thing to just give an assessment of the central bank monetary measures in the past 1 year. You don't consider the past where we're coming from. Remember, we're coming from an economy that was in a recession in 2016 and grew by only 0.82% in 2017 and just about 1.91% in 2018. So the central bank has been battling to use monetary policy tools to bring the country, the economy out of the doldrum and obviously try to stimulate faster economic growth rate. Some of the policies that they came up with in the past 12 months include the decision to bar local corporates and local investors from investing in open market operations instruments, and they can only invest in federal government bureau. So what has happened is that that has depressed interest rates below the inflation rate. Of course, we are talking about inflation rates today at about 12.13%. But if you look at rates on OMO, you observe that the rates have crashed. The rates on OMO, the rates have gone down to about 5% for the instrument. So we are dealing with a situation where the central bank is trying to into the credit market. The central bank has also come up to insist that the banks have to increase their loan-to-deposit ratios initially to 60% and now to 65%. These are measures they have put in place to drive credit creation, to drive lower interest rates, and encourage the economy to pick up from that aspect. But it goes beyond that. We just have to complement it by the fiscal policy of which unfortunately are not succeeding. And yes, effectiveness of this monetary is not as hard as get complemented by policy.
Now, this is what the bank says it wants to do. It says it wants to reduce that figure, 12.13% inflation rate in the economy by ensuring that prices of food items don't keep rising at every turn. That's why we made loans available with single-digit interest rates. That's what it says. Has this impacted on the commodities to lower prices and to cut inflation, in your view?
Well, as you know, the inflation figure has risen consistently month on month for the past 3 to 6 months. So the use of monetary policies to drive down inflation cannot be effective because the inflation that we are facing today is not coming from excess credit expansion. It's only when inflation is driven by excess credit expansion that you can use monetary tools by introducing contractionary monetary policies to force down inflation rate. The inflation we're dealing with now is what we call demand pull inflation because the demand for food items particularly rise and the border closure, which led to a shift in consumption to tubers and other locally produced goods without commensurate increase in their production is what is driving up inflation. Central Bank said they are going to create 10 million jobs. They will want to stimulate cassava, a couple of potato and all those things. But it's going to be a long journey because if you stimulate some of this production, you need to go beyond monetary tools. You need to get to the point where you have to address some of the infrastructural deficiencies we have. Take, for instance, the issue of difference in inflation rate between the urban and rural inflation of more than almost 300 basis points. The difference is because of severe insufficiency of transport infrastructure. With the central bank going to start building roads. You need to address some of the structural deficiencies we have in the economy to actually moderate inflation. It goes beyond what you can achieve with monetary policy.
That's a good place to let it rest. I most sincerely thank you so much indeed for talking to us and analysing those instances that the CBN had to return 60 billion naira to bank customers. Many thanks indeed, Johnson Chukwu, a financial analyst, for talking to us on State of the Nation, and to you for being part of the show. Many thanks indeed for watching.